going the route of buying individual stocks is probably going to be a wilder ride for you. It's better to buy what I would call an index fund or an index exchange traded fund, which is ETF for short. An index fund is a mutual fund. An exchange traded fund is something that's a little bit easier to trade on the stock market. And what I would do is I would do it through opening up your own Robinhood account, your own Fidelity or Charles Schwab account. A lot of these companies have these ways of investing. You can just Google, how do I get started with investing? Pick one of those companies, open up an account, deposit some money, and then start trading. But my recommendation is don't just jump right in and buy individual stocks because depending on what's going on in the world, depending on what's going on with that company, depending on what's going on in the economy, that can be a wilder ride and it may
Well,
discourage you from ever investing again.
C Square, how much money do you need to start really making money in the stock market? Like, am I really saying anything coming into the stock market with $1,000 or
So
$5,000? Like, what am I really doing
here's
here?
what I'll tell you, man. As a rule of thumb, it's less how much money you have to invest. What's
Hmm.
more important is that whatever you're investing, you do consistently, right? So let's say you only have, like, I got $250 to invest. $250 is not going to be a big investment in the stock market. That being said, or in a mutual fund. But if you invested, you know, 75 or $100 a month and just consistently threw it into that account, and then every time you invested it in there, it bought the exact same thing, it bought a little bit more, a little bit more, a little bit more. By the end of the year, you got $1,200 in that account, plus you have the growth if what you were investing in increased in value. And that's the way to really make this thing happen is just invest a little bit at a time over time and just let it grow and grow and grow.